Let's move on to a discussion that we've got planned for you today on the Finance Minister's commentary and the likelihood of any kind of relook on that FPI tax. Sandeep Parekh, Swaminathan Aiyar and Nandita Parker joining us on this morning. Thanks so much, all of you, for being with us today. Let me just, start off with you, Nandita, and get a sense of whether or not you really, took anything away from the Finance Minister's latest comment saying that she was willing to discuss the issue. Do you feel it could be seen as an olive branch from the government side?
Yes, I think it's a very welcome statement from the government, and we're looking forward to discussing the issues and why the trust structures cannot be converted into corporate structures, why it is not advisable to ask for conversions, and the real issues that FPIs face when they invest in India in terms of taxation. So the taxation has created a very high friction cost for the management of funds, especially open-ended funds. And so these are some of the issues we're going to discuss. Let's remember that these trust structures have been set up globally. In the United States, there are Massachusetts was the traditional state where these structures were set up for mutual funds, pension funds, and so on. So large institutions use these trust structures. And India is a very small percentage of global allocation. So it would not make a lot of sense, or it would not be feasible for these funds to change their structures in order to invest in India. And the second part of that is that these funds are not taxed on their capital gains in other countries of the world. So India is the only tax regime where foreigners and foreign residents are being taxed on their capital gains on securities that they buy and sell in India. And that is making India quite uncompetitive. We hope that when we speak to the finance ministry, that they will hear us out and they will see how much harm this is doing to foreign portfolio inflows in India. In fact, especially since February of 2018, FPI inflows into India have really diminished. And in fact, from this budget of July 5th, there's been a very sharp daily outflows of FPI money. And what is really disconcerting is this is against a decent global backdrop. You have the United States, where the stock market is still doing extremely well. You have a falling interest rate environment now globally. So this should be an environment where India should be able to attract much larger inflows. And especially if India is targeting, and the government is targeting, a $5 trillion economy in 5 years, India needs to get a much higher share of foreign portfolio inflows. And in fact, it should start thinking about how to target 30 billion types of inflows annually. And a roadmap must be created for that to happen, and that work must start right away because we are behind the curve here. So there's a lot to talk about, and I'm very, very hopeful that with the kind of mandate this government has, that they will not hesitate and they will put the full force of their minds to it.
Right. Swami, morning. Foreign investors have clearly fled the stock market, and this has happened right after the budget. What, according to you, is the main reason? Is it just taxation, or there are other reasons attached to that as well?
The budget was an immediate trigger, but there are other background reasons. and everything has come together to do this. The budget itself was expected to lower corporate tax to 25% to be competitive with the other Asian countries. It failed to do that. It only reduced the corporate tax to 25 for smaller companies with a turnover of 400 crores. Much worse, the rate of income tax was increased very, very sharply, with the peak rate going up to 42%. And I think the government of India did not realize that a large number of foreign portfolio investors, like pension funds, they are organized as trusts and therefore have to pay now this 42.7% income tax. And the immediate reaction of the finance ministry was, let them change into corporations. And the answer is, sorry, we can't do it, because things like pension funds are they have to be organized as trusts. So when you suddenly hit foreign portfolio investors with this huge double whammy, corporate tax not coming down, income tax going up to an astronomical level, India becoming completely non-competitive with other Asian countries in these two respects, naturally you are going to get a large-scale exit. There are all these other factors. What are they? One is job reservations. In Andhra Pradesh, Jagan Mohan Reddy says, I'm going to reserve all industrial and joint venture jobs, 75% of them for local people. Earlier in July, Kamal Nath said in Madhya Pradesh, in the private sector, 70% of all jobs are going to be reserved for local people. This is unconstitutional. I hope it will be struck down by the courts. But it shows the direction in which people are moving. Over and above that, there is this huge pressure for private sector job reservation. And Mr. Modi is trying this constitutional amendment that 10% job quota in the public and private sector for economically weaker sections. And he intends to amend the constitution so that the courts will not strike this down. Now, when people are trying to compare where to go to, should they go to Bangladesh, should they go to Vietnam? If they say in India you will have faced this 10% reservation almost immediately and maybe additional reservations the way the private sector is going, is this a place to invest in? No, it does not look like a good place to invest in. Over and above that, reneging on past contracts. Jagan Mohan Reddy says, 5,000 megawatts almost of solar and wind power projects. No, I'm not going to pay these high prices we paid in the past. I'm going to renegotiate it down. Now, the whole basis of market capitalism is that contract is sacred. If contract is not sacred and the only thing sacred is populism, why should people take the risk of coming to this country? So, in all, it seems that India is not serious about competing with Asian neighbors or Latin American neighbors. As I said, instead of focusing on saying, do I compete with Vietnam, Bangladesh, you're looking at, can I compete with Congress Party and BSP and SP on populism?
Okay, yes, indeed, that's a valid point. Swami, the finance minister as well, seems to be wanting to hear out the FPI. She indicated that in her interview to the Economic Times. You think some resolution can be expected? A rollback surely seems ruled out.
Clearly, if you say, I'm willing to listen to you, they'll say, this woman has lost it. Let's go somewhere else. I mean, they screamed loud. Oh, the whole thing was well debated. Nirmala Sitharaman knew exactly what the problem was. And yet she went ahead and passed the finance bill without any amendment. So you go, you know what the problem is, you listen to the people screaming, you do nothing about it, and then say, I'm willing to listen, let's talk about it. I'm sorry, this is not the way you are going to enthuse any foreign investment.
Okay, Sandeep, let's bring you in on this conversation as well. What's your perspective? Swami, of course, having a very, very vocal view on the fact that the government's completely damaging sentiment and making the scenario very, very sort of bleak for FPIs. Yeah. And on the other hand, do you feel that the fact that she's actually referred to a possible dialogue is any indication of an acknowledgement of the concern that's growing?
So first of all, let me acknowledge where she's coming from. She is saying that we will always have parity between foreign investors and Indian investors. Yeah. And I think that's a great thing, because that's what we've been trying to achieve for the last 3 years. We've made Mauritius redundant, we made Singapore redundant. We want investors to come in directly. But that's obviously premised on the assumption that India will have a kind of a decent tax mechanism and a process which works for people. Essentially, let me just step back and talk a bit about why people set up trusts. Trusts are not legal entities, right? They're not juristic entities like companies. They're set up because of ease of collecting money and distributing money. If you're today, just take the Indian example. If you were to set up a company and wind it up instead of trust, it may take anywhere from 3 to 5 years. Investors typically want the money in 24 hours after the wind up of the fund. So it really doesn't work anywhere in the world because companies are supposed to be permanent bodies and not temporary bodies set up for investment work. With that in mind, I don't think any of the international, some of the largest pension funds are set up as trusts. Because of one country laws, they're not going to start converting themselves into corporate. So I don't think it's practical from that perspective. But I think the final answer has to be the parity of income tax between individuals and corporates. Everybody's very excited about in the future we'll have a 25% tax rate for companies, but we should have that for individuals as well. So the arbitrage goes away. The second area is the distinction between business income and investment income, which is of course a very long topic. I won't bring it up here, but again, that has to be relooked at in terms of how much of a parity do we want between them.
Give me a gist. Give us a gist. I know it's a long topic, but give us a gist regardless of how it would apply here.
So essentially, business income is when somebody does trades in shares, right? So if you're a broker, for example, and you're trading on your proper account, then it's considered as business income and not as investment income, even though you hold it for 3 years. FPIs have been given a special dispensation that they're deemed that it's whether you do churning on a very routine basis, we'll still consider you as investment income. So the taxation is much lower for capital gains tax, especially if it's 1 year plus, versus business income is anywhere from 25 to 40%.
Right. Nandita, just want to get you in on the discussion as well. What is the FPI's reservation on converting to a company structure? Can there be a middle ground kind of situation that can be reached?
No, so as I mentioned, these structures are global structures, and most of them cannot convert from trust into corporate structures. Also, it sets a very bad precedent because then you would be invoking GAR. And you might say, oh, we can give you one-time relief from GAR, but, 5 years down the line when the officials change or the line changes, you can't put much, you can't take much comfort in doing those sorts of things. Those are temporary fixes. And as I mentioned, we need a much more credible, stable, predictable tax regime in India in order to attract FPI flows. Let's not forget that pension funds, for example, in the U.S., do not pay capital gains taxes. So their funds compound without paying taxes. And for them to pay taxes in India and for us to withhold taxes, that is quite onerous.
So Nandita, are FPIs booking out of India because we have seen huge outflows of late?
So I think the reaction to the budget has been pretty dramatic, as can be seen from the FPI outflows of the past month. And I think that once the course corrects on a policy front, or we see an acceleration on growth or expectation of an acceleration on economic growth, we can expect some inflows. So, those are the three things. I mean, let's remember that the Reserve Bank of India will announce monetary policy on August 7th. And if they take a much stronger policy stance than what they've done in the past by cutting rates, let's say by 50 basis points, then that will clearly wake people up and draw some more attention to Indian equity markets, and it might revive sentiment. But I think the big elephant in the room when we have conversations with investors is taxation, and that's really something that must be addressed.
Right. So then do you see some midway being reached via the process of dialogue?
As I mentioned, there is no midway. The surcharge must be removed. I really don't see, since it was done inadvertently and it was not by design, I don't see why it should remain going forward.
Okay. Swami, the same interview that we were chatting about with the finance minister and, what she spoke with the Economic Times about also talks about her asking the RBI to cut rates. And would you say that's imperative to do so because that in itself will at least try and revive demand a little bit better, try and rescue the situation, little bit at least, which you say is mostly global in nature?
It's a very partial remedy to a very big problem. As I said, the fact that you do not have a conducive and competitive climate, that is a dampener, not just for foreign investors, but for Indian investors too. Over and above that, we have the problem of global headwinds. The whole world is slowing down. Not only the whole world, one country after the other is having sharply falling exports, including China and Korea, including Singapore. So, when you have this kind of climate, in any case, the global economy will be tending to pull India down, over and above our own individual problems. So, a rate cut by the RBI, it may have some impact, especially on things which are linked to the rate of interest, like shall be the equalized monthly payments, for instance, for housing. Some things like that may be positively impacted. I do not think they will be able to offset this much larger gloom of the global economy and, as I said, these various other factors of the local market. The positive thing may be that we now have a good monsoon. After a very dry June, we've had a very wet July. The reservoirs are looking pretty full. So if there's a jump in the rural economy, that would certainly be a boost. A cut in the RBI rates, it could be a boost. If the Iran problem is solved and oil prices fall, that could be a boost. So it's possible to see some silver linings here and there. But I would say that the outlook by and large is not favorable, and I'm not at all surprised that foreign investors have been fleeing. I would not be surprised if a number of Indian investors also began to say, look, let me at least partially exit. The outlook is not good.
Sandeep, I see you nodding. That was just my question. First of all, do you feel that the outlook is that grim currently?
I think things are indeed bad, but I think it's just part of any cycle that we see. So clearly the government has to kind of do, things which will push the cycle into the upward trend, in terms of reducing taxes, for example. And it doesn't have to be permanent, right? We have a budget every year, so we can recalibrate.
But the likelihood of them actually doing away with this tax, as is the want from the FPI, it seems very...
Seems low. Yeah, because it says I'm not doing any review. I have not been asked by anyone to do a review. The finance minister fairly categorical in that statement also.
Right, so I don't think it's happening, but, the bigger picture is I think the government needs to things are looking bad. So I think they need to look at taxes only one aspect, of course, and we need to, of course, look at many other aspects in how to boost the economy with this primarily private sector investments and spending, which is, of course, pretty tough.
Sandeep, talking about FPIs purely, do you think in any middle ground reached, because the rollback seems completely unlikely, and given the current situation, FPI is only drawing out from India?
So here's my guess. My guess is that FPIs will set up special purpose vehicles in, let's say, Mauritius, not for tax benefit, but because they need to set up a corporate entity, which is... So there may be a churn in terms of new FPIs will get registered as opposed to the parent. But again, that depends on whether the parent charter allows that kind of an SPV to be set up.
Model, yeah.
The larger, the issue here is that we've always had the tax flip-flop when it comes to the government. And we've seen foreign investors in the past move past it. You know, they've actually kind of taken it as par for the course. The reaction this time is extreme. You know, and as you said, it may not be just the tax issue that's worrying them, but this time it seems to be a bigger cause for concern. What's driving them away, according to you?
No, so I think it's basically the economy which is somewhat of a funk. I don't think tax is as big an issue as it's made out, simply because investors say, okay, even if you put 60% tax, they'll kind of say, okay, this is my expected return, I'll lop off 60%. So that's not the sole reason why investors run away. I think one is uncertainty, which investors really hate. And the second is the underlying economy. I think these are two keys.
So even on the overseas borrowing, we're seeing that controversy now, and again a flip-flop there. It might be in local currency as opposed to dollar denominated. What do you make of that entire issue?
No, so I think it's obviously a tricky issue. There are pros and cons to both, whether you want to kind of import the currency risk or not. I think that's the key question. Again, there's no one very clear answer, because if the number is small enough, I think importing a couple of $2-3 billion of currency risk is not such a big deal, to be honest.
But will there be enough appetite if they do go ahead with it?
I'm sure there will be. I'm sure, that, especially, you know, almost all the Western world is now negative interest rates. So we are pretty attractive from the debt perspective.
Yeah. Swami, you know, just to close in the discussion with you, what can the government do to try and infuse growth back into the economy? Because that really seems to be the crux of the issue, even with the FPI fraternity.
I mean, if there is this huge global problem, the idea that you can overcome a global problem by the government doing something, it cannot. Secondly, we are definitely feeling the impact of a serious drought, I would say, in the last financial year. As you saw, the agricultural growth was negative in that last quarter. It has pulled down the growth in the last quarter. And until more money comes in after the next crop, the rural area is going to be short of money. You can't get away from it in the short run. Hopefully, good monsoon will provide some revival. But the government will just have to wait for that. If the government did something, I mean, suppose the government had just cancelled that 7% hike in income tax. Suppose it just said 3%. And this will also work for the foreign portfolio investors. That would have been a positive gesture that the government sees it has made a mistake. When you make a mistake and you persist in that mistake, and then you pretend as though, you know, till now you haven't heard what the foreigners are saying, you know, now I'm willing to listen to you. I mean, this is not the way to go about it. So yes, I think the RBI should be cutting interest rates. It makes sense because your consumer price inflation is low. And if you have a global slowdown, that is an appropriate time. What more could the government do? It could have gone for a fiscal stimulus. It has chosen on paper not to go for a fiscal stimulus, but frankly, the way I am seeing the numbers going, please do not believe this fiscal deficit number. I am sure that actual revenue is going to be substantially lower. And I would say perhaps the government should not then cut spending. Let the fiscal deficit rise a little in this particular year because of the extraordinary circumstances, unless things are changed by a number of favorable developments like a good monsoon, the resolution of the Iran problem, some of those things. So you could have some relaxation on the fiscal side, but please do not think that this will overcome the current slowdown. The reasons for the slowdown are deep. The reason for foreigners getting disillusioned with India is deep. The reason for India simply not worrying about being competitive with Southeast Asia. That requires a change in the mindset and a change in a whole lot of things, from import duty, from subsidies of various kinds, from populist schemes of various kinds, to labor wages, capital wages, land laws. So many things would need to be changed if you really want to become competitive. And if you don't change those, what you are saying may be just the start of something more serious.
All right, on that note, we've got a lot more clarity on what way this overall issue is headed. Nandita, Swami, as well as Sandeep, thank you so much for taking time out and joining in and giving us your all-round view on the FPI issue. As of now, still no clarity from the Finance Minister.